7:12 a.m. Chicago time on Monday, the 15th of June, 2015. This is a pre-recorded Trader Bite. I have an obligation to my kids this morning, and I'm not able to do it live at 8 a.m., which means that there's additional exposure here in the form of, the market not opening for another hour and about an hour and 20 minutes, hour 15 minutes. So a lot can happen between now and then. We do have numbers at 7:30 in about 17 minutes. Empire Manufacturing expecting 5. But let's start out by looking at the news after the typical risk notice. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not indicative of future results. There's a fair amount of news overnight. I did post it yesterday live as I was sitting at my desk preparing for this week. The Greek talks broke down after 45 minutes yesterday with both parties walking away from the table. This caused a quick reaction in the euro and is the reason we're gapping down across the board. In the U.S. indices. European indices are weak this morning, and that's the reason. It's just another deadline has passed for Greece, and a new one has been created. I believe it's the 18th or something, and so there's no progress there, and it looks like we're getting closer and closer and closer to a default. There's not enough time at this point, apparently, for the Greek government to have its referendum once a deal is stricken. So things look pretty bad. Here's the news. Greek government official refuted claims that they have discussed a potential default and stated that Greece are hoping to reach a deal by June 18th. Greek 2-year yield up over 100 basis points. Greek ATG index down 6.3% and Greek banking index down 12.8% following Greek talk failure over the weekend. So pretty bad. Also, at 5 o'clock Central today, about 2 hours ago, the Russian Central Bank announced that it cut its one-week auction rate by 100 basis points to 11.5, as expected. And then, in addition to that, the market is tentative, likely to be tentative over the next couple of days, as we have a midweek FOMC press conference. We're looking for hints of a first potential tightening. The calendar, again, Empire Manufacturing, U.S. Empire Manufacturing, it's a New York number, month on month, expected at 5, and comes out at 7:30. And then at 8:15 we have industrial production expecting 0.3%. Also at 8:15 we expect cap utilization or capacity utilization in the U.S. at 78.3%. And then manufacturing production at 0.3%. At 8:45, we have the weekly ECB purchases number, not significant. And then at 9 Central, a half hour after the cash open, we have U.S. NAHB Housing Market Index expecting 56. And then at the end of the day, we're looking for long-term tick flows and total net tick flows. That comes out at the close of cash at 3 Central. As far as speakers this morning, very important, ECB's President Draghi is speaking to the EU Parliament in Brussels at 8 a.m., 9 Eastern. At 11 o'clock, ECB's Kuhn speaks on EU investment plan in Brussels, and at 4:55 p.m., Australia's Reserve Bank of Australia Assistant Governor speaks in Sydney. Probably not very significant, but I would certainly pay attention to the 8 o'clock announcement or speech by Draghi. Other than that, looking ahead, since it's Monday, looking ahead for the week, tomorrow, we're looking for German and UK CPI, the German ZEW survey, US housing starts, building permits, API crude inventories after market, and ECB's Merch and ECB's NOT and ECB's Nawatni. Wednesday, we're looking for Japanese trade balance, the Bank of England minutes, UK jobs report, Eurozone CPI, FOMC rate decision, Fed's Yellen's press conference, big day. Thursday, Swiss and Norwegian rate decisions, UK retail sales, CPI, weekly jobs report, Philly Fed, EIA nat gas. Oh, I forgot Wednesday. We have crude oil at 9:30 as usual. EIA natural gas on Thursday. ECB's LTRO announcement, and then we have ECB's Draghi again, ECB's Kerr, and on Friday we have the policy statement from Japan. That's a mover overnight, and a rate decision, and then Canadian CPI, and then Friday we have Fed's Mester. Friday is expected to be a fairly quiet day. Let's look at the market as it stands. So let's start with the big picture first. So what did we accomplish on Friday? I created this micro composite here from the high as we were climbing back up. On Friday, we did manage to gap down, and we were not able to push any get the responsive buying that I was looking for. We did manage to get our targets though, and before rotating down, the extended target on Friday was 2072, which was hit last night overnight. Did not quite push down there on Friday, but overall we still remain in balance. We're still trading in this noisy area. We have some poor structure below us, which takes us to the 72, which is being repaired now. But again, we've left some poor structure above as well. So still market chopping back and forth. Pretty quiet trade on Friday. Here's the open at 2092. And the hypothesis for Friday was responsive buying up to 94.95. It hit 94, and then we're looking for a rotation down and a push through to the areas below. So on Friday we're looking for it to fail from this. If you recall, the 94 quarter was the area I was warning about on Thursday. If it gets below there, then we would hit this thin zone and start looking at taking out some of the single prints on the market profile, on the traditional market profile. If you recall here, my look on Thursday is we're likely to test down towards 97, but we're looking higher, and 2104. Quarter being the target, which we accomplished on Thursday. And then I said if we break lower, that was hypothesis number 2, if we break down to 97 and a quarter and then we break lower and through 94 and a quarter, then we're likely to go down this flagpole, take out this poorly auctioned area, this excess low and everything, and that brings us back to 72 in this area. This is the high volume node here at 72 and a quarter. That was left behind, and so what we did on Friday is we opened right at 92, tested up just a tick short of this single print up here, or this LVN zone, and then we rotated down and we took most of this flagpole out and left a pretty poor low. You can see the ledge here on the profile. It was a pretty poor low on the volume profile as well, and I was looking for continuation lower to fill this gap and continue to take out what we left behind from Wednesday. Friday got lazy though. The trade did manage to rotate down. It pushed to 94, a tick short, and then it rotated down, but it didn't quite muster up the power to actually push through and test some of the lower areas. We had a profile with a downward skew, poor low, looking for essentially this is a double bottom here. We were looking for this to continue lower, and it did overnight. Looking at the overnight profile, once we gapped down on the Greek news, and we have just gone sideways. We've built a beautifully Gaussian profile here, and have been sitting sideways. This profile does have its point of control a little bit higher, and we're below that. This looks weak. It's hard to tell between now, the market's going to open in an hour and 10 minutes. It's hard to tell between now and the open, but my primary hypothesis for today, my primary plan for today is for it to again try to be responsive. Looking at how things are shaping up, this could just as easily push higher, tempt higher again for a test of this 82 area, and then fall back into the belly of the curve overnight, and then continue lower. But this naked point of control below at 72 remains open. We're actually trading inside of the range that we had for the non-farm payrolls of last week, 2 Fridays ago. We're right in the middle of that zone here as we fight this area. The low on non-farm payrolls in the September contract is 2078.75. So here we are stuck in that the big monthly LVN zone. I posted a picture of it on Thursday, I believe. We're stuck here. I believe we try higher, but we're likely to chop around and then continue to push this a little bit lower. I don't think we're going to push into the 2085 point of control. It's very possible, but I think it's a lower probability given what's on deck for today. So that's the primary hypothesis. I need to cut this short, so real quick scan. The 10 years beautifully tested this. If you recall, 124.17 was the target, and it went to 124.16, pushed through by 2 ticks for a beautiful bounce here of over a point, over a handle in the 10 years. Just an excellent auction going on in here, very orderly. But we did push to this high volume node at 124.17. We got to 16, as you can see it there on the low, 124.16 even. That's two ticks through, and it's pushed back up above, and it's essentially testing the 38% pullback. The 50% is up against these the naked point of control up here. It's somewhere in the middle here at 126 even. And it looks like that's where it's headed currently. So really interesting trade in there. I know several of you trade the 10s. Euro Stoxx, last week when it came down here, I talked about it pushing back, likely to push back to the HVN at 35.80, and a test of this 35.50 point of control, MC point of control, and there it is. It pushed through by 10 ticks to 35.90. 35.80 is this high volume node. We've now successfully tested from below. This is free to go lower, and the next target's 33.53 and then 32.91. My view on the Euro Stoxx, unless something happens with Greece, my view on the Euro Stoxx, this is a setup for a swing short, in my opinion. And that's really it. That's all I had for you. We had an open AAQ or AMA, Ask Me Anything on Friday. Tons of you attended. We had over 500 people or so attend, and many of you have requested the video. I did tweet out to fill out this little form, and the system will automatically send you a copy of that video. Look for it on Twitter. A note saying Friday's webinar is available to be viewed. In the past, what I've done is I've posted it as a tweet, and I continue to get asked for it even though it's been posted as a tweet. So instead, I'm just generating a list and cleaning up the website just so that people who are interested in this stuff can just get it. If you're not interested, or if you feel like you don't want to be on the list anymore, you can always unsubscribe. I'm not here to spam you. But do go to futuretrader71.com. The topmost blog post is one that I put up yesterday. If you want to join the list to be notified of public webinars, tools, forms that I've created, specific topics, it's all trader centric. I'm not selling you anything. It's just a much easier way for me to target the stuff that I'm putting out. And if you go to that most recent blog post, you'll find a form in there. Just fill it out, and you'll be included in all the stuff that's going out. The Friday AMA covered a lot of stuff that I think is very, very important. Some really good questions there. We looked at a trade in crude oil, stalking it, reading the tape, reading the dome, how you scalp it. I covered a lot of that stuff. I know this stuff is very confusing to a lot of people, but I tried to, and it's something a video you want to watch a few times. I tried to get in as much depth as possible as far as reading the tape and the behavior in the tape. This is my bread and butter's tape reading. This is how I came up in the trading world is to be a momentum scalper. And then I converted into a bigger picture using volume profiling and stuff. But it's where I'm most comfortable. So I took a trade in crude oil. Live, described what I expect to happen, took the trade, described what should be the expectation, and why the trade didn't work, and what to expect once the trade didn't work. So you could see the entire structure of how that's done. I think that'll be useful to you. I'll leave you with that. Good luck today, and I'll catch you tomorrow live. Take care.